All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and today we're going to talk about a stock that's kind of interesting. Caught my eye. Warren Buffett actually, in his most recent 13F filing, sold the stock with a PE of 5. Like, what the hell is a value investor doing selling a PE of 5? I want to dig into it and see if I can figure out maybe why, or if it's really he just missed out on a good deal.
Yeah. If you like this kind of entertaining stock market content, where it's two stupid guys trying to figure everything out, give us a like and subscribe, okay?
That will get to it.
Two stupid guys trade stocks.
All right, the stock here in question today is Organon. Their motto is "Here for her health."
Here for her health.
Her health. Yes, exactly.
And yes, everyone, there are boxes behind me. I'm still moving. This is the worst.
That's great. At least, yeah, it looks like a nicer house. You got some trim behind you, you know.
Yeah, I was actually going to rip that off the wall.
Oh, boy. Well, Organon's been around for a long time, actually. Founded back in like 1923. They specialized in hormones in their early days. They actually synthesized insulin was one of their early products. They ultimately were acquired by an intermediary company, which was then acquired by Merck in 2009. And they just spun off from Merck this year.
Okay.
All right. So they have 3 main units is how they're organized within this new spinoff entity. They have a women's health unit, right? They have a legacy products unit, which is kind of old off-patent drugs that were still under the Merck umbrella that kind of went off with the Organon here. Right. And they had a new kind of biosimilars business. So yeah, biosimilars.
Oh, yeah. No, I deal with them all the time. Do you know what any drug that ends in MAB stands for money?
Yeah, well, sure. I mean, I think it actually stands for monoclonal antibody, but sure.
Stands for money, baby.
Expensive.
They do Nexplanon?
Yeah, they do Nexplanon.
And NuvaRing. Okay.
Yeah. All right. Nexplanon is their big daddy, basically. Look at that. $680 million in revenue last year.
Yeah. I see a lot of people with Nexplanon.
Nexplanon, though, is about to go off patent. As part of the story here a little bit.
Okay.
Yeah.
All right.
Yeah. But for those of you who don't know, Nexplanon is an implantable device implanted in the kind of upper arm of young ladies seeking to not get pregnant. Lasts for 3 years, I want to say, is the duration of effect there. Yeah. It's a pretty minimally involved procedure to plant in the office.
It's pretty easy. It's a little bit weird because you can feel it.
Mm-hmm.
So that part people don't like, but basically it's contraceptive that you don't have to take pills. So it's just right there.
Exactly. Contraceptives have kind of moved away from pill form now. You see both Nexplanon is a very common one, and also IUDs and implanted uterine devices. Those tend to be more common in my personal experience, but they have some drawbacks in terms of like some women can have like some cramping and discomfort associated with that. Nexplanon tends to be a little bit better tolerated by patients. But regardless, they have a pretty broad kind of assortment of medications here. This is a cholesterol medication. I'm not familiar with Nasonex. Is a steroid medication for allergies. Singular, another allergy medication. Bosamax is used for osteoporosis. Then they have this kind of burgeoning unit here, biosimilars. So biologic medications, as Dylan's talked about, are very expensive medications, and some of them, the early ones, are come off patent now. So what you're seeing is this biosimilars, where this is basically a generic version of some of those very expensive monoclonal antibody drugs, and that is one of the units within this Organon.
Okay. I have heard of Renflexus. It's Crohn's and ulcerative colitis.
Yep. Yeah. It's infliximab. It's just the
I had to look the other one up. I don't
exactly. So they spun off this year. It was June 3rd. It was the actual date. It was announced back in kind of May 17th. Was like basically the way they do this is almost like a dividend. So if for every 10 shares of Merck stock you owned, you got 1 share of this Organon entity. All right.
Okay.
Now, it was an interesting question. So, you see as a company spins off a unit, that the parent company and the unit being spun off, their interests are not necessarily aligned. To the parent company, it's up to them to extract the most value from this, and that can be done in a couple of ways. One, you'll see that there was actually a $9 billion payment that Organon had to take on a whole bunch of debt to pay to Merck.
To spin off?
To spin off, yeah, exactly. Okay. They took on $9 billion in debt, 9.5, but $9 billion of that went to Merck. Now, the other thing that's kind of interesting is that Merck is not interested in giving it a good market capitalization. So that 10-to-1 kind of number right there doesn't really reflect, like, when I looked at from like the standpoint of the revenue, Organon made up a much larger portion of the revenue than that would reflect that 10-to-1 ratio.
Okay.
So there becomes this kind of difference in performance, right? Because it wasn't a pure entity when it was created, and you get a different outcome as far as how it tends to trade on the open market. So there were some studies looking at spinoffs and how basically this study right here is a pretty long study from 1965 to 2000, saying that spinoff shares achieved an excess return of more than 10% per year. Yeah.
Okay.
What is the market rate of return on average, Dylan? Like
10.
About 10, yeah. So this is telling you that spinoffs double the performance basically over a long period of time compared to stocks that were just within the
excess return.
Return.
I missed the word excess.
Yep.
I was like, how does that make sense? Okay.
Yeah. So they tend to do better. This is actually a chart here illustrating this as well. So CSD is a ETF that tracks spinoffs only, and then this GSPC is a SPY equivalent, market index fund. So you see the blue line here, CSD tends to outperform. This is more recent data than the previous one where it was 10% excess per year, but still there's outperformance even over a shorter, more recent time period.
Right.
Yeah.
I'm pulling it up on my chart, actually. I'm trying to look at it.
So we're looking at the revenue here. This is kind of what I was talking about. Merck revenue up all the way up to $48 billion. But a 1 to 10 would reflect that Organon was only responsible for like 4.8. In reality, Organon was responsible for over $6 billion of that. So actually a much larger portion. So that 1 to 10 gives them a market cap that is less than they would deserve based on strict revenue to revenue kind of numbers, if you think of it from that standpoint.
Right. Okay.
And then what I wanted to give you an idea is just like how far off this is. Yes, Organon definitely has some issues. We're going to talk about those here in a second. But if you think about it from a price to sales component, right? This right here is Merck. Merck is pulling about 4.31 as of today, according to FinViz. And when I give that multiple to Organon and their expected 2021 sales, we're looking at a market cap of 26.72 billion in comparison to their current market cap of 7.9. Yeah.
Okay.
They're trading at like I said, this is price to sales, so they're trading at a significantly decreased price in comparison, right?
So essentially, in short, Merck has a better reputation. They're giant and all that stuff. But if you compare similar numbers, then Organon is selling at almost 70% discount.
Yeah.
So I'm getting from this.
Yeah. Not that it's not deserved. And like I'm going to talk about that in a second here too. This is some of the stuff they've done since they become independent. They've decided that women's health, hence their motto, is really where they want to go. So they've already made some acquisitions, actually. This Friendo Pharmaceutics right here, they want to move into like more of a so that there is endometriosis, huge market. There are no approved treatments as of now for endometriosis.
No, super complicated.
Yeah, so it's still an early development drug, but they paid like up $975 million for this acquisition, depending on it meeting certain milestones in terms of clinical performance. But the other thing they acquired here was this medication that helps with preterm labor. Very, very common problem. And one of those, it made me think of the movie Boiler Room, because that's one of the medications in that.
Never seen it.
It's worth watching. I'll send it to you. It's on YouTube with commercials for free. But another viable kind of treatment option there. And then it's postpartum hemorrhage. Another issue that it doesn't have a lot of great kind of treatment options in terms of pharmaceutical options there. So, I talked about the discount that they've been getting, and management is targeting a mid-single digit growth rate, right? Well, let's look at what they've been doing recently. So this is where the ugliness hides, right? So they're broken down in those three big segments I talked about before, and this is the year-over-year growth in those three segments. So established brands is losing 6% per year. Women's health losing 10% per year.
Oh, losing. Oh,
Losing.
I thought those were dashes, not negative signs.
Nope. Those are negative signs. Biosimilars growing at 41% per year. Solid growth.
Biosimilars,
but a very, very small portion of the pie. All right. So this is talking a little bit about that biosimilar growth. This is all the medications that they're saying will be coming off of patent protection as far as biologic medications over the next decade or so. So huge,
this is a cool chart.
Yeah, pretty huge opportunity, right? That unit's is growing 41% per year now, and it's going to probably continue to grow for quite a while.
I use Taltz, Cosentex, and Dupixent all the time. Dupixent's the shit.
Yeah.
Oh my god, yeah. It's awesome.
Yeah, I mean, you work in the dermatology field, so it makes more sense. You use more biologics than I do. I just use lidocaine and needles.
Oh no, I use them all the time.
And I wanted to kind of look at what their profitability was like. So they've had a little bit of contraction over the last year as well. Not only the sales decreasing, but also their margins have decreased, going from 68% gross margin last year to 65% this year, 46 to 39.8. So you're going to see, I'm going to model forward the growth of all three of those units, and then I'm going to give you, based on like a margin, what I think the company will generate in earnings in 2026. So this is what I talked about too. This is that $9.3 billion in debt they got hanging out in their balance sheet, which kind of sucks.
That's a lot.
But one of the nice things that this chart also highlights, though, is that their CapEx is pretty low comparatively, so they generate a lot of free cash flow.
But their free cash flow to debt sucks.
Yeah, they're still a little bit more levered than I like. They're at somewhere just over 3x. 3x is kind of my cutoff personally for a debt to EBITDA ratio. They were just above that. So this is what I kind of predicted for 2026. So this is not like a great case scenario for them, right? So I took the established brand segment, which was decreasing at 6% per year. I kept that going forward at decreasing 6% per year. Women's health, decreasing at 10% per year. I brought that forward, decreasing at 10% per year. Biosimilars, which is growing at 41%. I brought that down every year. I was 35% next year, then 32%, then 30%, and then 25%. And I got up to $1.6 billion in revenue, which I think is certainly achievable for them. So that will become a much larger portion of their business over the next 5 years.
Yeah.
Giving them a total kind of basic, what do you call it? I forget the word I want to use here. Revenue of about $3 billion. The EBITDA margin, 35%, gives them about a $1 billion profit margin. I gave them a PE of about 15, which is about market average. It's, not great, but I think that's reasonable. Now, that would give them about a $15.8 billion market cap in the year 2026, about 254 million shares outstanding as of today, which would give you a per share price of about $62.20. It is currently trading at $31.16. So this is basically, in a bear case, looking at still about a double over the next 5 years from my interpretation of this, which is about 20% per year IRR.
But here's the question, Vinny. If anyone whoever's still watching and whoever doesn't know Vinny, he's very frugal with his stocks. He's very particular. Vinny, is this going to be added to your portfolio?
It is. I'm going to buy some Organon.
Okay, I'll buy some then. That's all I need.
Wow. This is not investment advice. This is just you taking my best hack at stuff. But yeah, this is I'm gonna pick some up. I think this is too cheap.
And all right, I'll buy 8,000 shares.
It's going to be tremendous growth.
All right. So like 20 calls, 2-week expiration. You're on, buddy. I got it.
Yeah. The $40 calls be perfect. All right, guys. Well, let us know what you think down below in the comments. We'd love to hear from you.
Yeah. Have a good one, guys.